Mr. Monopoly is a shrewd businessman who is always looking for new opportunities to make money. He is also a risk-taker, and is not afraid to invest in new and emerging industries. In today's real-world market, Mr. Monopoly's investment portfolio would likely include a mix of stocks, bonds, and real estate. He would also likely invest in alternative assets, such as art, wine, and collectibles. Mr. Monopoly would diversify his portfolio by investing in a variety of different asset classes. This would help to reduce his risk and protect his wealth in the event of a market downturn. He would also likely invest in a variety of different companies, both domestic and international. This would help to diversify his portfolio and reduce his exposure to any one country or industry. Mr. Monopoly would also likely invest in a variety of different investment vehicles, such as mutual funds and ETFs. This would help him to save time and money on investment research and management. Here are some specific investments that Mr. Monopoly might consider. 1. Real estate. Mr. Monopoly would likely invest in a variety of different real estate assets, such as commercial real estate, residential real estate, and vacation properties. He would also likely invest in real estate in a variety of different locations, such as the United States, Europe, and Asia. 2. Stocks. Mr. Monopoly would likely invest in a variety of different stocks, including large-cap, mid-cap, and small-cap stocks. He would also likely invest in stocks from a variety of different industries, such as technology, healthcare, and consumer staples. 3. Bonds. Mr. Monopoly would likely invest in a variety of different bonds, including government bonds, corporate bonds, and municipal bonds. He would also likely invest in bonds with a variety of different maturities, such as short-term bonds, intermediate-term bonds, and long-term bonds. 4. Alternative assets. Mr. Monopoly might also invest in alternative assets, such as art, wine, and collectibles. These assets can be more volatile than traditional assets, but they can also offer the potential for higher returns. Mr. Monopoly would likely use a variety of different investment strategies to build his portfolio. He might use a value investing strategy, which involves investing in stocks that are undervalued by the market. He might also use a growth investing strategy, which involves investing in stocks that are expected to grow at a faster rate than the market. Mr. Monopoly's stock portfolio would likely consist of the following. 1. Technology stocks. Mr. Monopoly would likely invest in technology stocks, as he believes that this industry has the potential to grow rapidly in the future. Some of the technology stocks that Mr. Monopoly might consider investing in include Apple, Amazon, Microsoft, and Google. 2. Healthcare stocks. Mr. Monopoly would also likely invest in healthcare stocks, as he believes that this industry is essential to the well-being of society and is likely to continue to grow in the future. Some of the healthcare stocks that Mr. Monopoly might consider investing in include Johnson & Johnson, Pfizer, and AbbVie. 3. Consumer staple stocks. Mr. Monopoly would also likely invest in consumer staple stocks, as these companies sell products that are essential to everyday life and are therefore less likely to be affected by economic downturns. Some of the consumer staple stocks that Mr. Monopoly might consider investing in include Coca-Cola, Procter & Gamble, and Walmart. 4. Utilities stocks. Mr. Monopoly would also likely invest in utilities stocks, as these companies provide essential services such as electricity and water. Utilities stocks are typically considered to be relatively safe investments, as they are not as volatile as other types of stocks. Some of the utility stocks that Mr. Monopoly might consider investing in include Duke Energy, Exelon, and NextEra Energy. 5. Real estate investment trusts. Mr. Monopoly might also consider investing in real estate investment trusts, which are companies that own and operate income-producing real estate. They can provide investors with exposure to the real estate market without having to purchase individual properties. Some that Mr. Monopoly might consider investing in include Simon Property Group, Public Storage, and American Tower. 6. Mr. Monopoly would diversify his stock portfolio by investing in a variety of different companies and industries. This would help to reduce his risk and protect his wealth in the event of a market downturn. He would also likely invest in a variety of different investment vehicles, such as mutual funds and ETFs. This would help him to save time and money on investment research and management. Mr. Monopoly would also likely use a variety of different tools to manage his portfolio. He might use a financial advisor to help him make investment decisions. He might also use a variety of different software programs to track his investments and monitor his portfolio's performance. Mr. Monopoly is a shrewd businessman who is always looking for new ways to make money. He is also a risk taker, and is not afraid to invest in new and emerging industries. In today's real-world market, Mr. Monopoly's investment portfolio would likely be a mix of stocks, bonds, and real estate. He knows that it takes time to build wealth, and he is willing to wait for his investments to grow. He is also disciplined enough to stick to his investment plan, even when the market is volatile. If you want to be a successful investor like Mr. Monopoly, you need to develop these same qualities. You need to be shrewd, risk-taking, and patient. You also need to be disciplined and willing to do your research. If you can do all of these things, you will be well on your way to becoming a successful investor. Hope to see you in our next financial fable.